Aiding investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Hopefully we'll have Stan Harley as our guest today. Slight problems over there. He's very, very busy. He might not be able to make it, but so far we're about 80% sure that Stan will be on. If not today, we will most probably have him on Friday. And, of course, we have Norm Winsky. We're going to have Stan in on Thursday because we have Norm on Friday. So if we can't get him today, we'll try to get him tomorrow or Thursday. Hopefully the markets are not going to calm down, that's for sure. Anyway, we're having some good volatility today, up and down, which is the kind of thing we'd like to see. I started the show today with the hog chart because I want to show you when these patterns don't work, boys and girls, stay out of the way. That's the main reason they're there. They're there for risk control. They do some area of predictability, and they do repeat, but by golly, they're mainly for risk control. When the pattern fails, you've got to stand aside. That's the bottom line. Let's look here at one of the patterns that is actually going pretty well. If you remember here, folks, we were talking about the Treasury bonds here yesterday, and we were looking for this trade that we put on at 53.20 to come in somewhere around 56.09. And if you'll take a look at the old calendar today, you'll never guess what the high on the old bonds was today. I haven't updated it today, but if you'll check, you'll see that the high on the bonds was 156.10. Okay, we'll see if that's going to be the case. Okay, let's move on here to the next movement here, and we will keep an eye on the natural gas. We were looking at the same thing in the natural gas, and it also completed. So 2 out of the 3 that we were looking at, the hog trade was long since gone, folks. We took our loss on that, but the one in the natural gas worked out really well. And then also it gave a sell signal up there because you had a nice 3 drive to a top pattern, and so far it's made about $500. But sometimes they work, sometimes they don't. That's the bottom line. I had a very interesting phone call yesterday, folks, late in the afternoon. One of my old colleagues at Drexel Burnham Lambert called up, and we were chatting about the markets and stuff, and he's been around for as long as I have, hard to believe, and we were talking about the old days, and he told me some stories about me that I wasn't even aware of. I don't want to share them, but they're nice stories and everything, but it made me feel good, and Sarah was listening to the conversation, and it was quite nice. One of the things was I was on a high up on the list by Mr. Milken to go to work for him, and that was mainly because I got there so early in the morning. I got there like at 5:15, but I remember when something like that was going on. One of the big bosses from Fred Joseph was a secretary or treasurer of Drexel, and he was a friend, and also he was in the office, and he came in, and he knew I was up for that job, and he looked in the office, and he said, Larry, he said, do not take that job. He said, I'm not going to approve it if it goes through, and I'll see that. Milken did arrive at 4:30 in the morning. Yes, he was there between 4:30 and 5. He came in a RV, but it was a RV that was bulletproof, had bulletproof glass, bulletproof doors, windows, everything else, bulletproof tires. And he came in, and there was a limo behind him, so he was very worried about security, of course. And he lived up on Mulholland, so he was only about 10 minutes away from the office. But he did come in very, very early, and he left late. He left like at 9:30 at night, so he put in long days. And it was really tough to work for that group. They made a lot of money, They made a lot more than I did, but I made a lot, so I was happy. But I didn't want to have any part of that. I probably wouldn't have seen my kids again till they were in, high school. But I did the right thing. Hey, I had it easy. All I had to do was buy gold and silver. It went up, and I made money. That was it wasn't quite that easy after that, but that's how it went. And let's move on to the next one, folks. There is a situation going on in the soybean oil market where the oil market is absolutely going ballistic. I posted a chart of this the other day. I wanted to explain to you what kind of market this is, folks, because this is 2 days. It's actually 3 days late now because they went limit up the other day. This is a situation in soybean oil, and this was from a lecture that John Kenneth Galbraith gave to us when I was at Indiana in graduate school, and he said, soybeans and their products have an inelastic demand. It doesn't make any difference what the price is going to be. There will be demand. And so price is unaffected by this. And really what is happening here, Mr. Z has told us before, but it's palm oil. Palm oil, being the exotic oil from Malaysia and India, places like that, has some really bad problems, and then they have to fix it up or interchange it with soybean oil and other oils, and that's what's causing this market to go up. Now, we know markets go up exponentially like this. They also go down, but trying to find the top is kind of difficult. Like, you have to be some type of a pattern, and boy, there is no pattern here, folks. I mean, if you want to try a suicide play or catch a falling knife, try shorting some soybean oil. Hey, it might work. But, boy, there's nothing there to tell me that there's anything there to make any difference with the thing or not. So we'll watch these to see if they're going to mean anything or not. But that's another one that we want to pay close attention to. I've also been asked to I want to get the soybean oil chart up here. Just give it to me here. One second, folks. 1 second here. I have a great affinity for soybean oil. You'll see here now that we are already at the 61% retracement. In fact, it's trading above 57, folks, so we shattered that number. But those two red lines there on the weekly chart from 2009 to 2011, those are pretty much equal. So you see we're almost at an equal move that we had. Now, there is no reason in the world to even think about trying to sell it. Just go back and look at 2011, how long it stayed there. It stayed there for 3 or 4 months before it started to come off. So when this market's finished, it's going to give us plenty of time to find a spot, for heaven's sakes. That's really it. Mr. Z's telling us it is the Malaysian palm oil, and that's what's causing it. I heard that in the news, and also I heard it from Rich Anderson. So those are the things that I try to keep you from getting in front of, in the futures markets. Sometimes we're pretty good at them, sometimes we're not. So far in the gold market, we did the right thing. We got gold broke about $35 from the high so far. We're still thinking we got a chance for that gold to get down to around 1707, 1705. This is only Tuesday. We might even be there by today or tomorrow. So we got to take a look at it then. But at this particular point, we're still a little ways away from being long gold. So we'll be looking at the GLD, and we'll also be looking at the GDX, putting them together to see if we can get them lined up the right way. So those are just a few of the ones that we're watching here. The hogs are not ready. We'll wait. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the opening call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the opening call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, Billy Ray's asking the question, what is my number one book on psychology? Well, the number one book is the Bible, written by you-know-who. Anyway, Matthew, Mark, Luke, and John, and all the other dudes. Anyway, my favorite book for psychology and trading, of course, is Trading in the Zone by Mark Douglas. That's very good. I also think, without a doubt, we have a lot of books. We have Mr. Z on the line, and he wants to talk about the soybeans. Mr. Z, how you be?
I just have a question. Why, back at the Council of Nicaea, did they leave out the Book of Lawrence out of the Bible?
Yes,
that's my question.
Well, they renamed it. It was the Book of Enoch, the Book of Numbers. It was the Book of Lawrence, but you have more. You have more BS than I do, and I've got a lot.
Since your good pals, Rich Anderson and Cy Monley.
Yes.
Since I suspect they were the models for Winthorpe and Billy Ray, and those guys are in contact with Mr. Beeks, my question is, will the acreage report that comes out just a week from Wednesday out of the USDA, will it be bullish or bearish for new crop soybeans?
You know, Mr. Z, I don't think it makes any difference what the report is. It's going to be bullish because we have so little supply out there. I mean, my gosh, I mean, you look at the value of what, there's nothing. I mean, we better get a good crop or we're going to be looking at famine in some countries next year. So it'll be bullish no matter what. It might be short-term bearish, but frankly, you never hear me talk like that because I don't follow reports. I look at the charts and stuff, but just looking at the charts, there's so much support underneath the market on these things. I mean, my goodness, it'd be silly to go into that report short. Yeah, you might catch a falling knife, but boy, the odds are against it. That's my 2 cents worth. I'll leave that up to you, buddy, if you want to try it, but I certainly don't want to.
Fair enough. I'm looking in Tiger TV. your daily November 2021 soybean charts.
Yes.
Question, that low Friday at 12:02, which tested and rejected the 12:03 high that I see prominently sticking out there in January. Was that a tradable low as you see it?
Yes, of course. Look how many days it came down. It was down almost 2 weeks, and virtually with very little correction, considering how much the market has gone up. There's another example that there's a great deal of, demand for this stuff. Even if it sells off a little bit, buyers come in. So I'd rather look for buys than sells. That's the way I look at it. But tomorrow I might be bearish. All I can say is right now it certainly doesn't look bearish.
Very good. Lastly, I do have to ask you, as we're looking at this new crop bean contract, stair-step higher since last June, July, and now we're coming right into planting, then growing season. Of course, anything can happen then. We all know that. My question is, how do we handle the idea of adding and pressing the long side if we push up and retest and exceed that? I guess that was the 1st of March high at 1265, the highest high that we see right there on the chart. How do we handle that?
Okay, now you asked 3 questions at one time. A is, when are you going to find a good buy spot? 2, when are you going to add? And 3, when you're going to add again. Is that correct?
That's correct, sir.
Okay, so the first thing we have to do is find what we think is going to be a legitimate low. I'm looking maybe towards the early next week, into early April. I'm going to take a look at that. And then what I'll do is I am going to try to put a situation where we can add to contracts, much like we did to gold on the short side. And so that's my game plan. Now, part 3 to that is really difficult for me, Z, because, I can't see into the future. I'm pretty good for 30 seconds, 40 seconds out in the future, but after that, it gets real fuzzy. So I'd have to wait and see, because, if you come out of there really strong from a buy signal, it's easy. You just buy the first 382 pullback. That's your second unit. And then your third unit's going to be the tough one, because you don't know how quickly it's going to get to that next level. So 1 and 2 I can understand how to do, but number 3 is a little difficult for me. So I'll handle those little by little. It will definitely be after the report that's due the end of this month. So we'll be looking at sometime into early April that we'll be watching for a buy point in these November beans that haven't been planted yet.
I thank you. That answer, if strong, buying the first 382 pullback just on the most recent rally extension, whatever that is, that's real clear, real simple. I'll be prepared to act on that should that occur in the next 3-4 weeks. But I'll just mention this, of course, that soybean crop. Actually, the planting is already underway in Texas, as is corn, of course, down there. And so the planting season will be upon us in full swing just in a mere 3 weeks' time. So I have put on my seatbelts, and I'm ready to go either way on this baby this coming 4 months. So we shall see.
That's what the blind man said. We shall see. Just remember, Mr. Z, in the world of the blind, the one-eyed man is king. So keep that one eye open.
There we go. Very good. Thanks so much. Great to hear you doing this noontime show. It's a great time spot.
Yeah, it's really great. I enjoy it very much. Okay, folks, we're going to continue on looking at these markets here this morning. I wanted to bring one other thing to your attention, and that is about the crude oil, folks. We've had this big break in crude oil. We went down and we made a double bottom today. We were talking about the bearishness that we had up there at the $62 barrel. We went down below 59 again today. We're trading above right around 59 right now. So it's backing and filling in here. So it's important that we not go below that 58.40, because that's 2 standard deviations down from the high. You break that, folks, you're looking at $53 oil very, very fast. So don't be long that oil if it goes below 58. That's a really negative sign. That's where the option sellers have to come in and cover their positions if you get below there. because they book in either one or two standard deviations in the price. And if you start getting beyond that, bada bing, bada boom, they're going to go a long way. That's why you want to learn, if you're new into this business, make it easy on yourself. Learn to be an option seller. Learn how to sell calls. Learn how to sell puts. It puts the odds in your favor by 85%. You're going to win about 85% of your trades. And not only that, but the amount that you're going to make is going to be considerably more than the amount of money that you lose. But there's one thing that you have to do if you're going to do that, folks. Very simple rule if you're going to be an option seller. Let's say you sell an option for $1.90, okay? If that option doubles against you, if it goes to $3.80, you automatically should get out, because these things have unlimited risk. That's why they give you the profits at 85%. So if it doubles in price on you, you've made a very, very bad mistake, and you have to get out. We'll be right back with Stan Harley. He's in the house.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. We have Stan Harley of the Harley Stock Market Letter on the line. And Stan, once again, you nailed the number to the wall on March 11th. What do you got for us today, pal?
Well, good afternoon, Larry. And hey, I like your new time frame. Very nice.
Oh,
I'm sure
God,
you like. I like it too.
Oh,
and,
my God, yeah.
Yeah. Now that you're back on Pacific time with Arizona, I think the markets are going to chug-a-lug sideways here for about a week, and then I think we're going to see some kind of an eye-popping move to the upside. And I think April is just going to rock and roll to higher. I think a lot of folks are going to be astounded to see the kind of gains that are coming. Fundamentally, Larry, there's a lot of stimulus money hitting the market, and certainly the seasonal pattern supports it, but the present cyclical pattern supports it as well. So in all, I see no divergences. Just a few days ago, with the exception of the NASDAQ, we had all of the major benchmark indices at new all-time highs. The NAS, which got a little bit overextended in mid-February, has backed off a tad. It's doing a little bit of congestion here, not going down very much, more sideways than anything, kind of working off the overbought condition. But I see that running its course by approximately a week from now. And then I think you're going to wake up one morning, middle of next week, and we're going to rock and roll back to higher highs.
Well, any idea of price targets you're looking at, Stan?
No, I don't really have a price target in mind, but I am looking for several percentage points higher across the market, basis the Dow, the S&P, the NAS, the New York Comp, the Russell. Certainly among the big five indices, the Russell's been the stellar performer in this cycle, and I expect it to continue to do so. But really, it's going to be just an across-the-board rally. A year and a half from now, I think you're going to see the Dow well up into the north 30s and getting very close to 40,000 when it's all said and done. And that probably will about do it.
That means Harry Dent will finally be right after 35 years. He said the Dow was going to go to 40,000. So, see, everybody's right eventually, they say, right? I keep waiting for my day. I keep waiting for my day.
Just like a stop clock, huh?
Yeah, no kidding. The next one you've got up here that's pretty interesting here is I think this must be the Treasury bond. Is that correct? Yes, it is. USB. That is a Treasury bond. And is it the end of the world in Treasury bonds now, Stan, or is it something that's going to...
No, but I did want to spend one more moment, if you can, go back to the chart of the...
Oh, sure. You bet. Yes, I certainly can.
What I have shown there for the viewers is the trading cycle pattern in the stock market. And I've done a very detailed study of this going back many, many years. I first recognized it just visually, a long time ago, when I averaged up all the trading cycles in the stock market. I found that the average was right around the number 40, plus or minus, a little more, a little less. Although rarely do we see the number 40 showed up as a distinct cycle on the charts. And this chart illustrates it really well. You can see from the March bottom of last year, the first trading cycle was, these counts are in trading days, by the way, 37, 31, 61, 26, and so on. None of those is 40 trading days, but there are 6 of them there. If you add them up and divide by 6, you get 40. And that is the nominal cycle on the daily chart through all the benchmark indices for the stock market. And it has been that way in the past, and it'll continue that way long after we're all gone.
Yeah. Stan,
for some reason, I can't. There is, but essentially there's no real mathematical foundation for the number 40. There kind of sort of is. If I take the square root of 89, I take number 89 Fibonacci and divide by square root 5, it comes out to be 40 when rounded, and that might very well be it. I know the number 40 shows up in many markets across many time frames. Certainly, all the religious writings are replete with references to the number 40. It just seems to be a common theme throughout human endeavor.
Isn't it in the Hearst book, The Profit Magic of Stock Transaction Timing? I remember he talked about a 40-day nominal cycle, and he broke it down into 20 and stuff. As I recall, I remember that. And that stayed for a long time, because boy, I traded off that 40-day cycle in commodities for a couple of years before it shifted, But they do shift back and forth. There's no question about that.
Yeah, whether it's in the Hearst book or not, I don't recall that.
I'm doing it from memory, and there's a lot of gray fog out there, so I'll have to double check it. So, as I recall, I will try to remember it. Let's
the
check.
next chart. If we have time, we can go to the next chart.
We got plenty of time. Go right ahead.
Oh, okay. I thought I'd shift gears and talk about one of your favorite subjects, and that's the bond market, which I know you talk about almost every day. The bonds have been coming down since about June of last year. The chart that will be coming up on the screen here momentarily for the viewers is a chart of the 30-year bond and a weekly chart, and it's been trickling down here, and it's broken slightly below its 200-week moving average. And I find curiously that the 200-week moving average over the long haul has proven supportive. And I expect it to be supportive in the current environment as well. We're a little bit below it. The tracking ETF, I would point out, Larry, the ETF has not yet kissed its 200-week moving average. It's just a little bit above it. So I'm expecting bonds to put in some kind of a low pretty shortly. Whether the TLT will kiss its 200-week or not is yet to be determined, but I think this is looking like a very interesting spot to return back to the long side of bonds.
Okay, now, will you be looking for new highs in bonds like negative interest rates, or will you just be looking for a really strong retracement? Or is that too much to ask?
No, it's not too much to ask at all. No, I am looking for new highs in bonds. Yes.
Get out of here.
Yes, sir. Yes. I do believe we're going to see higher highs in bonds and moderately low and just a little bit lower in interest rates. I don't think they'll go negative. I've talked about this with you before in the past, and maybe I'll show it one of our next times we discuss the bond market. But there is a very clear, speaking of the number 40, there is a very, very clear 40-year cycle in the pattern of interest rates, Larry. And it goes back literally hundreds of years. The last inflection point in that 40-year cycle was October 1981, when interest rates hit a high. Before that was the summer of 1940. Before that was 1900. Before that, 1860, and so on. Very, very clear 40-year cycle. Of course, back of the envelope math, when you take October 81, you add 40 years, you get what? October 2021. Yes, I think it comes the next summer is where I think the high occurs, and that will complete the 40-year pattern in bonds. And then I think very shortly thereafter, within 2 or 3 months, I think you'll see the stock market see its final secular high as well.
Wow, that's really good. Hey, listen, buddy, this is really great information, and I want to thank you for being on, and we'll have you on again soon. And I know it's important to take out of your very important day, so thank you so much, Stan. We really appreciate it.
My pleasure, Larry.
You bet. Stan Harley, the Harley Stock Market Letter, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, folks, I posted a list of the components of the S&P 500 going 1 through 10, Apple, Microsoft, Amazon, Facebook, double Google, Class A and C, Tesla, Berkshire Hathaway, JP Morgan, and Johnson & Johnson. Folks, that's 25% of the stock market in 10 stocks, because they are cap weighted here, and these are very expensive. So that's you better pay attention to those stocks, because they're very important. One of the reasons that I always bring up the chart of Apple when I'm talking to anybody is the fact that it's such a good vehicle for trading. And if you remember, on Monday we posted this chart, which Monday would happen to be yesterday. You'll notice here at the 22nd. And what you do is you add one day to get to the 23rd. You'll see that 61% retracement there at 120. Today we hit the 61% retracement on the upside at 24.5. I don't know if we've gotten much above that right now, but that was the 61% retracement. So I'm following that because it's an easy stock to trade. You can see all the ABCD patterns in it going back to March 22nd into February 22nd into March 1st. And then you have another ABCD pattern, which is the Gartley that occurred on the 16th of March, and then come down making another ABCD at the 120. And here's where we are now. This could very easily take us up to 130 to 129 to 130, folks, if we break out of here to the upside, because we have been in a downtrend for several months now, contrary to what the rest of the market is doing, but that happens occasionally. That's rotation. We hear Mr. Basil Chapman and his expertise talk about rotation, and it's a very, very important thing to look at that as we see these things. Folks, someone's here mentioning about Bo Derek. Yeah, a lot of memories. Okay, let's move on here to the bonds. Someone asked a question about that target in the Treasury bonds. I'll get it up here because this is what we were looking at. This happened yesterday, folks, where we were on Monday's show. I said we were looking for a price objective around 156.09. The high was 156.10. We're trading at 155.28 or something right now. So we're watching for what the pullback will be here, because we've been in a really strong 3-day rally here since Thursday, Friday, Monday, Tuesday. So this is the fourth day of the rally. We might get one more day. So what we'll be looking for now is to see what the pullback is going to be. This is a completed trade, folks. When you buy it like the 3 drive to a bottom pattern that we were buying at 53.20, you have to decide how much you're going to risk. And our risk on that was 16 points, or 16 ticks, which was $500. And you've now made 4 times that. So that's completed that particular trade. So what you want to do now is to wait and see what the next entry is going to be. That's why if you're watching 8 or 10 things during the day, you're only going to get about 3 signals. And of those 3 signals, you're going to probably get executed on 2 or maybe 3. So if you're trading more than 5 or 6 times a day, you're either very, very good or very, very lucky. So that's just keep that in mind as you go through some of these things. Now, there was another phone call that I had over the weekend from a very nice young lady over in Pennsylvania, and she was not doing very well. She was feeling really bad, and then she started telling me about her account, and I was saying, well, maybe I could help her. And then she explained to me that she's had some tremendous gains. I mean, really tremendous gains of the tune of, substantial 20, 30% a month. But the problem was that she was getting involved in day trading when she was getting away from what she was really good at. And guess what that was, folks? Option selling. She knew exactly when to sell and when to sell the options, selling calls and selling puts. And she makes a very comfortable living doing that. Where she was giving some of her money away, a small percentage of what she was making was in the day trading, and what it was doing, it was frustrating her. Well, day trading can be very frustrating. Anybody that says it's not, you're lying to yourself, because it can be. It's very, very intense. That's why you never want to stand in front of the machine and stare at it all day long, because it's going to drive you cuckoo. And so I told her, I said, look, focus on what you do well, and then what you do is Billy just broke the code, Bubba. A, B, C, D. That's exactly what you want to do. Find a little A, B, C, D like we looked at in natural gas, like we looked at in treasury bonds. Find that, and that can be your day trading. You don't have to worry about oscillators, moving averages, fundamentals, whatever. That's it. But selling puts and selling calls, that is a flat-out no-brainer. That is a winning combination, but you have to learn how to do it, folks. It's not an easy thing. Options is very, very intense. They've got that, that what they call that thing, the deltas, gammas, zetas, thetas, betas, and whatever they are, all those Greeks that they have in there. You don't need to know all of those, but you need to know some of them. So make sure that you understand how to do option selling, because it's extremely important. Mr. Buffett has a whole section in Berkshire Hathaway about that. He's very astute at that. They don't talk about it a whole lot, but I happen to know a couple people that work there, so they do a lot of option selling out there at all different times. So remember, that's the way it usually goes here. Again, we want to thank Stan for being as a guest here. He's extremely busy now because he's running a hedge fund, and so he's really got his plate pretty well filled, but he likes to come in and visit with us, which is really nice for him to do that, that's for sure. Hopefully I'm going to have Rich Anderson tomorrow. He's retired now. Rich is getting to the point now he's getting lazy, I think, and he don't get out of the house much there in Minneapolis, but we're going to try to get Rich on tomorrow to talk to us about this coming big report that's due here at the end of the month, which will be very, very interesting, as we know. Okay, now I wanted to bring this chart up. It's a chart sent to us by one of our friends over in Hong Kong, and I wanted to bring it up to you. It's about the short interest in the market. In other words, this is the number of people that are short the market. You'll see this is at a record low. The last time we'd been this low was in 2000. The market was making a high at that time. Nobody was short. Now, where it is now, 1.5%, and nobody is short here in the market at this time. Whether this means anything or not, I don't know. It's just a chart. I have to look at the bar chart of who's buying and who's selling, but that may mean, and we've seen so many of these things, euphoria, valuations, margin debt, all that stuff is way up in this, stratosphere. But as we already know, it's different this time because the Federal Reserve has told us so. Okay, let's move on here to one other chart that someone's asked about, and I wanted to bring it up. It's the FANG chart of our good friend, Mr. Google. Let's get it up here because this is still an active possible position here, folks. I don't know where Google's trading right now, but it's sometime in this week or next week. If it gets down near that 2,000 level and closes right at the bottom of that red box, especially on a Friday, if it would do it on a Friday, that would set up a fabulous trade because you've been here for a little over a month. And that is going to be what they call the Black Crows. And if that thing gaps down on Monday, you're going to have a big winner. And if it doesn't gap down Monday, you get out of the way and take your loss and say, Sorry, Larry, but this one didn't work. And believe me, there's a lot of them that don't work. But that's the kind where you have the risk-reward in your favor so heavily skewed that you just about have to take a position in it. You don't necessarily have to do an option. If you wanted to, you could get onto Robinhood and do a couple shares. And if it doesn't gap down, then get out of the way. Okay, 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based, vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Well, folks, miracles of miracles. You're not going to believe it, but somebody has finally gotten through on the line, and we've got a caller from Kansas. And what would he like to talk about? None other than wheat. Robert, how are you doing?
I'm doing great, Larry. Thanks for taking my call.
Robert, you were first in line, buddy, so you're it. You want to talk about the wheat market?
Yes. Can you pull up a chart on wheat?
I sure did.
To me, it looks like we're getting close to approaching a bottom. I don't know if it's a long-term or intermediate or what, but, a tradable bottom.
Yes, sir. It's a Gartley pattern at 617 a bushel. That's very close to 618, so you got to take a look at it there, 617. you're going to have to spend about $250 to be a farmer at that point, because if we get much more than a nickel below it, I would think it would be wrong. So I wouldn't want to risk more than that. But you've got a beautiful ABCD pattern, and you've got a market that's extremely oversold. We're down a month. Actually, we're down a solid month, 20 days. We've had a few up days during that time, but most of the days have closed lower. So you got a very oversold market coming in at a 61% retracement. If you can't trade that one, buddy, you can't trade any of them. That's the way it looks like to me.
All right. Well, thanks for taking a look. I appreciate your perspective.
Now, are you in the wheat growing area there in Kansas, or are you in the metropolitan area?
No, I'm in the Kansas City area. They grow wheat and corn out in western Kansas.
Robert, I just noticed something. They just updated my chart. I'm not involved in this wheat. I just noticed this wheat has jumped 22 cents today. Let me put this up.
It's got a little bit of a pop.
Shut the front door. A little bit of the pop. Boy, that's the understatement of the year. Yeah, we hit, we didn't quite make our number. We got down to 621, and now we're trading at 635. We had a high of 644. So, hey, thanks for calling in, Robert. Really appreciate it.
Thank you, Larry. Bye-bye.
See you folks tomorrow. Bye-bye.